All right, let's talk about Citigroup. We're talking about a global banking titan that is, right now, standing at a massive crossroads. Under its CEO, Jane Fraser, the bank is in the middle of its most ambitious transformation in, well, decades. And the big question is it actually going to work this time? Let's break it all down.
And that really gets to the heart of it, doesn't it? I mean, after having an absolutely fantastic 2025, the new year has brought a whole new wave of doubt. The market is basically saying, show us the proof. Is this turnaround at Citi for real or not? And that fantastic run was no joke. In 2025, Citigroup's stock just soared, up an incredible 42%. This was all driven by profits picking up and this feeling that the huge restructuring plan was finally gaining some serious steam.
But then, 2026 happened. So far this year, the stock's down 8.7%. And just like that, a whole new wave of investor anxiety is creeping back in. This skepticism is setting the stage for a really high-stakes showdown.
Okay, so before we get into all the problems, you've got to understand the company's sheer scale and power. Let's start with what makes Citigroup such a unique and, frankly, powerful force in global finance.
So a key piece of the puzzle here is just how many different things Citi does. It's not just one business. It's spread across 5 core areas. And in 2025, 2 of them really stood out. Wealth, that was its fastest growing part, shooting up by 14%. And their huge services division, which grew a very strong 7%.
And this right here, this is kind of Citi's superpower. It operates in roughly 160 countries. Think about that. That's a bigger global footprint than any other American bank. And it's not just a cool statistic. It's a massive competitive advantage. This quote just nails it, doesn't it? This is the real-world impact of that huge global network. It's what the source material calls a structural competitive moat, and it's really powered by their Treasury and Trade Solutions business, or TTS. This is the plumbing of global commerce, handling the complex, day-to-day money flow for the world's biggest companies. We're talking payroll, cash management, international payments. It's so deeply embedded that for a client, switching is just incredibly difficult and really risky.
But, and it's a big but, despite those incredible strengths, there's this heavy cloud of problems just hanging over the bank. And these are the issues that are fueling that stock decline and causing all that market skepticism we talked about. And we're talking about some serious stuff here. Internally, you've got these costly regulatory orders and the massive risk that comes with trying to pull off such a complicated restructuring. And externally, well, you've got the constant threat of geopolitical instability, trade disputes, and fierce competition from all these nimble fintech rivals. It's a really complex web of challenges. All right, let's talk about the big one, profitability. We're looking at a metric called Return on Tangible Common Equity, or ROTCE. It's basically a report card for how well a bank is making money. And the problem is crystal clear. Even if Citi hits its own ambitious target of 10 to 11%, it's still way behind its biggest rival, JPMorgan, which is consistently pulling in over 17%. That is a massive gap to close. And you can just feel the pressure in this quote from an internal memo by CEO Jane Fraser. "We are not graded on effort." Wow. She's signaling a no-excuses culture because she knows the stakes are incredibly high and that the market is watching every single move they make. Now, you probably hear a lot about these consent orders. So what exactly are they? Well, they're basically lingering penalties from regulators going back to 2020. They're tied to some major failures in the bank's data and risk systems, most famously when they accidentally wired $900 million to the wrong people. For investors, these orders are a big, unresolved red flag.
Okay, so we've seen the strengths, and we've definitely seen the weaknesses. Now let's flip the coin and look at the bull case. Where are the big opportunities that could finally push Citigroup forward? Just look at this number, $175 billion. And that's the low-end estimate for what the world's biggest tech companies are expected to spend on AI infrastructure in 2026 alone. This is the new gold rush, and you better believe Citi wants to be the bank that finances it. And you know, this isn't just talk. They're making real moves. They've already formed a dedicated banking team just for AI infrastructure. Internally, they're rolling out AI assistants for their wealth advisors and coders, and they're already seeing huge efficiency gains. For example, they cut a document review task that used to take an hour down to just 15 minutes. Now think about that scaled across the entire company. So AI is one huge piece of the puzzle, but there are 3 other big levers they can pull. First, keep hitting the gas on growth in their wealth division. Second, use that massive 160-country footprint to really capitalize on growth in emerging markets. And third, the big one, getting those regulatory consent orders fully lifted. That would be an absolute game changer for investor confidence.
So you've got these strengths, these huge problems, and all this potential, and it feels like it's all building to a single moment. Everything is pointing towards one specific day, the release of their first quarter earnings report.
So let's just put this into perspective for a second. Jane Fraser takes over as CEO back in March of 2021. By last year, this massive, painful restructuring was over 80% done. And now, on April 14th, the market gets its next big piece of evidence to judge whether this whole multi-year effort is finally paying off.
So what is Wall Street going to be watching for on April 14th? Well, the headline expectation is huge, a 34% jump in year-over-year earnings per share. But honestly, the real story, the number that really matters, is going to be in the details. Specifically, are they making real progress toward that 10 to 11% profitability target? That is the metric. And this is the payoff. This is why everyone is watching so closely. Right now, Citigroup's stock trades at a big discount compared to its peers. Its forward PE ratio, which is basically how the market values the company, is around 10, while the rest of the industry is closer to 13. So if Jane Fraser can convince the market that this transformation is for real, just closing that gap could mean a 30% plus upside for the stock.
So it all comes down to this one ultimate question. After years of restructuring and promises, is April 14th the moment we see a genuine turning point for one of the world's most important banks? Or is it just the beginning of another false dawn? The market is about to give its verdict.